Hello, everyone. Thanks for joining us today, and welcome to this educational presentation where today I want to talk to you about how to confirm a winning trade. This is a very simple process I'm going to teach you today, but extremely powerful. You see, because many times traders lose money not because it's wrong to actually buy or sell a particular market, it's mainly because their entry is faulty. So what this technique does is it confirms whether you should be getting in or not, and that can make all the difference. For example, let's take a look at this older chart here in SFIX, okay? Let's say you're interested in buying this and you feel it's just gone up a little bit too high. And for all intents and purposes, maybe that guy in the chat room says it's overbought. So you say to yourself, okay, I'll buy when it comes down a little lower, maybe to a Fibonacci level or something like that. So you wait, and as you can see, price does start to go lower. So this piques your interest. It comes down to that particular level you've been studying, and you say, you know what, I'm going to jump in here. This is a good buy. And later on, it's probably going to be making new highs. All right, so you're in the trade, and then look what happens. It really doesn't go up. In fact, it starts to go much, much lower until ultimately you've got a pretty big loss on your hands. So you say to yourself, wow, this was a bad decision. I guess this is not going up at all. I'm going to exit and take the loss because most likely it's going much, much lower. And I don't want to be in this trade if I'm going to be losing a lot of money. So you decide to exit the trade with a loss. Well, with the technique I'm going to be sharing with you today, you would never have bought at this level and you would never have had to exit with a loss because all you had to do was wait for a 2-bar confirmation that I'll be teaching you today. And that would have been the bar confirmation in order to buy. And once you would have gotten in at this level, you could have potentially captured 57 points. So you see, it wasn't wrong to buy the stock. It was just where you got in. And so this is how powerful this confirmation can really help you. So we're going to be talking about how to confirm a winning trade. Now, it's easy to apply this confirmation method because it's one click away on our platform, the PTS Primo Charting platform that I developed the proprietary strategies that actually teaches you how to confirm a winning trade. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever Google those pictures of the guys on the trading floor, where they're making lots of weird hand signals and lots of paper all over the floor, those gentlemen behind the large wooden podiums were the stock specialists. Those were the ones that used to make markets around 50 or 60 stocks. So if you wanted to buy a particular issue, the floor broker would walk up to the specialist who made a market in that particular stock. So I made markets in waste management, US Air, IBM, and I made markets during the crash of 87 and the bull market that followed. So in my 47 years of experience of trading, not only on the floor, but after I left the floor, I know what works in terms of consistency and I know what doesn't work. So that's why we developed Specialist Trading. I teamed up with proprietary strategies with one goal in mind, and that was simply to educate traders all of the different techniques and methods I've accumulated in my nearly 5 decades of trading. You'll see that in today's educational presentation. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on Twitter or X, however you'd like to call it. Every day I post different setups that our strategies have generated, different signals. Also, I post a little bit of financial wisdom, so there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, remember, as I stated in the opening statements, we are first and foremost an educational company. So what does this mean? Well, what it doesn't mean is that if you've come here today thinking I'm going to tell you what I think the market's going to do, or you're coming here today thinking I'm going to give the best recommendation for a stock to buy or the best time frame to trade, you've come to the wrong place. Because remember, a good educator does not trade for you. A good educator teaches you how to trade so that you can make those decisions on your own. This is what we call the specialist edge. So my goal is not to force feed you signals, but to teach you how to trade with the specialist edge so that we can put the power back in your hands. In my opinion, this is the only way one can become a consistent trader, by making their own decisions. And what's missing from most traders, and the fact that they lose money is because they don't have the sound fundamental education. So that's the void we fill. We provide you with this education so that you can ultimately take charge of your own trading. That's the specialist edge we're talking about, okay? All right, so let's begin today's educational presentation. I'd like to start out with something that my mentors taught me because they saw that I was struggling, and here's what they saw through my trading. What my mentors taught me over 4 decades ago on the trading floor of the stock exchange was this. They said, Steve, a specialist always confirms his or her own trades. And I thought, okay, what does that mean? I'm confirming my trades. What exactly does that mean? Well, when we sit there and ask ourselves, how do we confirm the trades? There actually is a method. It's called the confirmation method. Now, we've written it out for you, and because we are recording this presentation, there's no reason to read it and to go into it because it's kind of wordy and you might get confused. I'd rather explain it on a generic chart here, how the confirmation method works. Let's say on this generic chart, you're excited about buying this. You think this stock or this market is taking off. So you jump in and buy. And like the first example we shared with you today, it goes the opposite direction, right? This is what discourages most traders, because what you want to do with any setup is the minute you buy something, you want to see it go up. And the minute you sell something or go short, you want to see it go down. But what happens so many times is it does the opposite. We get in and it goes the exact opposite way, right? So this is how the confirmation method can help us. Rather than buying at this level here or placing a limit lower, what we want to do is once we get the buy signal, that's okay. Once we get the buy signal, we simply wait for it to trade one tick above that bar where the buy signal is generated. See, this is where we'll go long. Now, this is not designed to get you in at the lower levels at the very bottom of a trade. It's designed to get you in when it's confirmed that it's going in your direction. Remember, we don't want to be sitting holding on to a losing position. So the confirmation tells us that since we had a buy setup right here, we're not going to buy until we trade 1 or 2 ticks above. And if we don't do it in the next bar, then we'll simply, with each preceding bar, we'll lower our level to where we enter. And we can track it all the way down until we finally trade at that level. Now, it does not have to trade above, close above. All it has to do is trade 1 or 2 ticks above the last bar. And that's our confirmation now that the market wants to go higher. This is where you want to get in. Because remember, what we want to do is get into a trade and have it as quickly as possible go in our direction. You don't want to be sitting around with a losing trade, because then you start to second guess yourself and you start to say, well, wow, should I really even be in this? Maybe I'll just get out. So you would have entered right here and taken advantage of the nice move up. See, it was the right thing to do to get into this trade. Your entry was just a little bit faulty. Now, this can work to the downside as well. These are the confirmation rules for sells. Once again, I'm not going to go over them. They're a little wordy. You can go back on your, each and every one of you will get a link to this recording. You can copy them down or take a snapshot. But let's look at the visual representation, a lot easier to explain. So let's say you've been tracking this market and you really think it's going lower. It's broken some Fibonacci support or whatever you like to trade. And so you say, I'm going short, or I'm buying the puts, all right? Now you immediately sell at these levels, and then look what happens. It goes the opposite way, right? This is what happens so many times with traders. It's not that your decision is wrong. It's not that your decision and what you think the market's going to be doing is faulty. It's that your entry is faulty. So rather than just get in right here, what we want to do is once we have developed a setup, a signal, we will only go short or sell or buy puts once it trades 1 or 2 ticks below. And with each preceding bar, we will track it. If we don't get filled, we'll continue to track it until ultimately we see that it does trade there, right here. Remember, it does not have to close there. All it has to do is trade there, and that's our sell confirmation. So at this point, this is where you'd get in and take advantage of the move down. Remember, we're not using this to get in at the bottom or get in at the top of a selling signal. What we're doing is we're getting in the quickest way when we know that price is going to go in our direction. We don't want to hang around being short and it's going the opposite direction, okay? That's the purpose, the real purpose of the confirmation method. So in order to know when to apply the confirmation method, you need a tool that translates what the market wants to do on a tick-by-tick basis. Because so many of our students say, this is great, Steve, this helps me, but I don't know when to apply the confirmation method. I don't really have a strategy, or I don't trust my method. So when can I apply this? Well, by using this tool. We call it the PET-D. This was a tool I was first introduced to some nearly 5 decades ago on the floor of the stock exchange. I developed it with ProTrader Strategies, and we've developed it into a color bar tool where there's nothing you have to do. We've taken all the hard work out of it for you. All it does is color the bars either green or red. For example, as we look at this old chart of Zion here, we see here that it's been going in a downtrend, but it quickly went back up. Now, most traders are late in knowing when this is going to happen. They will figure at this point right here, okay, we're in a downtrend. And by the time you figure out you're in a downtrend, it turns around and goes right back up. So here's how simple it is to apply the PET-D. On our platform, you simply click on the PET-D tab, and it automatically changes the colors from red to green. And it doesn't repaint, it doesn't reorganize. It will always stay with that color once the bar closes. So the rule of thumb is anywhere from 3 to 5 consecutive bars tells you that the market is going lower. And anywhere from 3 to 5 consecutive green bars tells you the market is going higher. Okay. Now, the beauty of the PET-D, as it says here, is that it literally translates what any market wants to do, any time frame, any direction. All right, so I want to teach you a technique by applying the PET-D and the confirmation method together. You're going to see how simple it is to use these two different techniques I taught you and how powerful they are. All right, so these are the buy setup rules. You want to see price above the 50-period simple moving average, but it begins to decline, all right? Once it starts to decline, click on the PET-D color bar tool on our platform, the PTS Primo charting platform, and then apply the confirmation method, meaning that you'll only buy one tick above the red bars. Remember, the PET-D will color the bars either green or red. So you'll only apply the confirmation method above red bars. This means you will buy when price trades above the previous red bar. All right, let me show you what I mean here. Let's look at that initial chart we had looked at earlier, right? Where you wanted to buy it somewhere around here and then it went lower. Well, here's how simple this technique is, all right? As it says up here, price is above the 50-period simple moving average, but it begins to decline, as we see right here. It's starting to go lower. So what we want to do is click on the PET-D color bar tool. So on our platform, come to the green strategy tab interface, click on PET-D, and it automatically changes the colors. Now, what do we have? We have all green bars except for this bar here. That's one red bar. So now we start to apply the confirmation method to the red bars that appear. That means we will buy if it trades 1 or 2 ticks above the high of this red bar. Okay, so there's the high of the red bar. So let's track it. Let's see what happened the next day. Did we trade there? No, actually we went lower. So now we just simply lower our confirmation down to the high of this bar, this red bar. You see, we're not going to buy up here anymore. Now we're going to buy at a lower level. All right, let's see if the next bar, if we traded above there. Nope, we didn't. So we lower our confirmation entry even less. We go down even lower until ultimately, now we've saved ourselves all of this time. You see, initially you would have been in this trade somewhere around here and had to sit through all these losses. But by applying the confirmation method, we're not even in the trade yet. Until right here, we see that we've made a new low. We lower the confirmation entry to right here, and we continue to lower it until ultimately we entered right here. So we're going to be buying when price trades above the previous red bar, okay? 1 or 2 ticks above. This is our entry. This is our confirmation entry. And then look what happened. 57 points in the next 2 or 3 weeks, all right? This was all done simply by learning how to listen to the market. The PET-D does not apply any fundamental news, doesn't look at earnings, doesn't look at interest rates, doesn't look at what's going on, with the economic indicators or economic announcements. Doesn't care about any of that. It's just looking at market behavior. And so look how simple it is. You could have caught potentially 57 points just by following this simple technique. Now, price gained 100% in just 3 weeks. That's how powerful this tool is. All right, so let's look at the setup rules if you'd like to go short, right? Once again, price is now below the 50-period simple moving average, but begins to rise. Once you start to see it rise, you click on the PET-D color bar tool on our platform, and apply the confirmation method to the green bars that appear. In other words, you'll sell one tick below any green bar. This means that you will sell when price trades below the previous green bar. So let's look at this example here in ADP, all right? Price is below the 50-period simple moving average and begins to rise, all right? It's starting to rise. So we click on the PET color bar tool on the PTS Primo charting platform, and we see what the colors change to. Well, we're all red, except right here, we have our first green bar. So this is telling us we can now apply the confirmation method to the green bar that appears. Now, remember, we are below the 50-period moving average, so that means we're going to be selling. We're not going to be buying. This is where students get confused, and they say, well, Steve, wouldn't I place it one tick above? No, remember, we are selling. We'd only place one tick above a red bar if we're buying. But since price is below the 50, we are a seller. So this is where we're going to be entering, either buying some puts or going short the market. All right, so now, as we see price continues to rise, we simply raise our confirmation entry. And it continues to rise even more. And as we see here, even though price now closed above the 50, if the next day we traded at this confirmation level, it would be below the 50 period. So this is still a valid entry to go short. Now, the next bar, we still raised it even more because even though, once again, we closed above the 50, here would be our entry below the 50, okay? So this is still a valid sell setup until right here we traded below. So now we're going to sell when price trades below the previous green bar. Remember, it does not need to close below. All we need to do is sell when it trades one or two ticks below the previous green bar. That's our sell confirmation. And in the next 2 weeks, the stock fell 25 points. You see how simple trading can be when you get out of your own way, when you release what my mentors called useless noise. In other words, following earnings, following fundamental news, following what the jobless claims were. Why overcomplicate your trading when it's as simple as this? All right, so let's look at some recent technique examples. You know how to apply the technique now. Let's look at some techniques that examples that happened within the last month, some within the last week. And remember, everything you're seeing is being displayed coming from our platform, the PTS Primo charting platform that was developed and designed by myself and ProTrader Strategies to teach you how to confirm a winning trade. All right, so let's start off with buys. We're only going to be looking at buy setups. Here's an example in AMAT, Applied Materials, all right? We are above the 50, so this means we're going to be a buyer. Remember, we'll only be buying if price is above the 50. If price is below the 50, we're a seller. All right, since we're above the 50, all right, we want to wait for price to decline. So price starts to decline, and when it declines, we click on the PET D, and we look for a red bar. Now, even though it declined from here, there were no red bars until this last bar. So this is where we start to apply the confirmation method. This means we will not enter it until it trades one or two ticks above. It's up to you. And look what happened. On the very next bar, it did trade above. So we enter right here. This was on the 1st of February. And we could have potentially captured 17 points in about a week, okay? Once again, see how simple this is? Let's look at another example. This one in ADSK. All right, we are above the 50-period moving average. All the bars are green. We've started to sell off a little bit, but now we get a consecutive green bar. So we would have started tracking here, here, here. It wasn't until right here on this 4th red bar that we actually had a confirmation to enter. So we would have entered, this was about a month ago, 38 potential points to the upside coming into this last week in February, okay? Here's an example now in AMD. All right, we're above the 50-period moving average. Price started to decline, but we didn't get a red bar until here. So this was our first confirmation entry. Since we didn't enter, we lowered it down to the next bar, and that's where we entered it, right here. This was a couple of months ago in December, and look what happened. It had a really nice run-up. Now, so many times students say, well, where do I get out? How do I stay in there? It's up to you. Remember, we teach you all these different ways to exit and to enter and to place your stop in the course. But for right now, we're just showing you the basic ways in which to apply the entry. Now, you could have exited, and if you had done that, you'd wait for another series of red bars, and here they are. They happened again. You tracked it all the way down until right here you would have entered, and potentially you could have captured 67 points had you stayed in from the beginning. Let's look at CrowdStrike, okay? Once again, we had a series of red bars. Here's where it was ultimately confirmed right here. This was about a month ago. 75 points coming into this last week, okay? See, trading, once again, is really simple when you get out of your own way, when you uncomplicate things. My mentors taught me, they said, it's the easiest thing in the world to overcomplicate your trading. Anyone can virtually do that. I mean, if you think about it, it doesn't matter if you've been even just trading a couple of weeks. You can overcomplicate your trading like crazy. You can add a ton of indicators. You can have 3 or 4 monitors in front of you. You can be looking at 3 or 4 TV stations. You can be reading a lot of blogs and going to chat rooms. That's really overkill. There's no reason to do that. And there's no evidence that shows that you are going to be any more successful by piling on too much useless information. What I have found and what my mentors taught me is actually the simpler things that work the best. Once you start discarding and letting go of these things that you think you have to attach yourself to, that's when trading starts to open up. So keep your trading simple and you'll start to see that consistency. All right, here's an example in the 4-hour dollar yen, just to show you that you can apply this to any market, any time frame, okay? The same process applies. We're above the 50, so this means we're looking for a buy setup. As price starts to decline, we see the red bars. So we apply the confirmation method all the way down until ultimately it trades above the previous red bar. That would have been our entry on the dollar yen. And in a couple of days, this, by the way, just happened last week, you could have potentially captured 150 pips. That's roughly $1,500 per unit, okay? Just in a couple of days. Here's another example in KLAC. All right, once again, price starts to decline, but it's not till this bar that we see it turn red by the PET-D. So that's where we start to use the confirmation entry. We watch it and lower it all the way down until it trades above. We don't have to wait for the close. We just simply have to see it trade there. That's our entry. 105 points potentially coming into February. And here's an example in Costco, where price started to decline right here, where the red bars appeared. We started to use our confirmation entry on this bar. Even though it gapped up, that was our entry point. And this was just a month ago, and coming into this last week, you could have potentially captured 170 points coming into this month. Now you see here, this was interesting. Do you see how these 4 bars were lower? They're a lower green color. That means they were down on the day, but the PET-D was still saying they're not red yet, so we couldn't apply the confirmation method. But back here would have been the place to get in, all right, because you could have potentially captured 170 points. So let's just go through the process before we move on to sell examples, all right? First thing you do is whatever market, whatever time frame you're looking at, you have to have a 50-period moving average applied, all right? And so you want to see that price is above the 50-period moving average if you're a buyer, okay? So now you see that price is above, and you want to see it start to come down, start to fall. And as you can see, price is starting to fall right here. So at that point, you apply the PET-D. Click on our PET-D on our platform, and you want to see if there's a red bar. And yes, that last bar that went down was red. So at this point, we start to apply the confirmation method. Why? Because we are above the 50-period moving average, and we would be entering right here, which is above the 50-period moving average, all right? So let's see if it traded there on the next bar. Nope, it didn't. So we lower our entry down to just above that bar, okay? And it did trade on the very next bar. It's hard to see here, but it traded just above, even though it didn't close. So that's our buy confirmation. You could have entered just about a month ago in NVIDIA, and potentially captured 235 points in 1 month, okay? This is how consistent you can become when you learn to discard all the things where there's no consistency and just focus on the chart in front of you. Now, we've just looked at a bunch of buy examples, different markets, different time frames. Let's look at some sell examples if you'd like to go short. We know not every trader likes to sell short, but if you are the type of trader that likes to go short or buy puts, here's a good way to take advantage of it. We're just going to flip the rules upside down. Okay, kind of jump the gun here. Let's look at this. ADM. All right, we are below the 50-period moving average, and price is starting to rise. So this is where we apply the PET-D, and we see that we have our first green bar. So this means now, since we are below, we're going to be a seller. We will go short 1 or 2 ticks below. See, we're not going to just sell at the market because for all we know, it can continue going higher. We don't want to hold on to a losing position. We want to confirm that it's going in our direction. So we won't get into this until it trades just below this first green bar. And as we can see here, it didn't. It went a little higher. Even though we closed just basically above the 50, our entry would be below. So it's still a valid sell setup. Let's see what happened on the next bar. Now we go below. So that's our entry point. We confirmed, we traded one tick below. The stock fell 52 points in the next 3 weeks. Now, obviously, some news came out right here, which caused this big gap down. Now, I've made no secret about this. I stopped looking at news some 4 decades ago because once again, I discarded things that had no consistency for me. News was just too subjective. I would see news, a great news article coming out about a stock I traded, and the stock would go straight down, right? You've all experienced that, I'm sure. Or some terrible earnings would happen with the stock or some terrible news, and the stock would go straight up. So it's too subjective. We want things that are cut and dry, like price being either above or below the 50-period moving average, or the bar being either colored red or green by the PET-D. Or we're either buying 1 or 2 ticks above or 1 or 2 ticks below we're selling. You see, it's black and white. It's just yes or no. There's no subjectivity with that type of trading. And so isn't it funny how we got short a full nearly 2 weeks in advance of some news event that caused this to gap down? Once again, learn how to listen to the market and let go of these, what my mentors called useless noise, and you'll be that much more consistent. Here's an example in ILMN. As we see prices rising, and here's our first green bar. So we will go short once it trades 1 or 2 ticks below, and it did on the very next bar. So there's our confirmation. And we had a really nice sell-off once again. Now, if we wanted to get out and take a quick profit, we could have. That would have been a nice trade. You could have made a good 20, 30 points and then gotten in again right here. As you see, we had 2 more green bars. We're using the confirmation method. There's our entry to go short, and we have another profitable trade. And then again, you could have gotten out and then gotten back in right here on this setup and had another profitable trade. Either way, if you had just taken the first setup and stayed short, you could have potentially captured 78 points in ILMN. Now, many times you'll see that where you get double signals before anything happens, like we have here in Charter. Here was a sell signal, but nothing really happened for the next week. And then we got another sell signal. That's okay, because ultimately it did kick in and you could have potentially captured 95 points. So many times you'll see more than one setup before price starts to go in your direction. Like right here. Here's an example in the Canadian dollar. Here's a daily chart of the Canadian dollar. We had a sell setup right here, followed by another one. And nothing much has happened until right here where we fell 390 pips or potentially captured $4,000 per unit. Let's look at this example in HUM, okay? We're below the 50-period moving average. Price starts to rally, but here's our first green bar. So there's our confirmation entry, but it doesn't trade there. In fact, we have a higher low, so we raise our entry, and we have another higher low, so we raise our entry even more until ultimately we had an entry confirmation. Right here, you would have gone short HUM, 125 points coming into this month, February. Here's an example in ARGX, Let's go through the process once again. First thing you want to do is always have the 50-period moving average applied on your chart, regardless if it's a currency pair, if it's crypto, if it's E-mini futures, or if it's a stock. You always want to have it there. And it doesn't matter if it's a 5-minute time frame or a weekly time frame or a monthly time frame. All right. If price is above, you will only look for buy setups. But if price is below, we're looking for sell setups. We want to be in sync with the overall trend. All right, so nothing really is happening here in ARGX. It's kind of going sideways. So we want to see price start to rise if we're interested in going short. And right here is the first bar. It starts to look as if it's starting to go up. So we click on the PET-D. And yes, that's our first green bar right here. So we can, if we want to go short this, if we want to buy puts, if we want to actually short the stock, what we can do is we can apply the confirmation method. If it trades, doesn't have to close below there. It just, if it trades there, we'll go short. So let's see what happened on the next bar. Well, the next bar went higher. So this means we will raise our confirmation entry up. Let's see what happened on the very next bar. It traded right there. So now we have our confirmation to sell, okay? Even though it didn't close below that level, now we have confirmation to go short. So at this point, you could have bought puts because we realize this is an expensive stock, or if you had enough capital, you could have gone short. But look at this, 132 points in just 3 days. Once again, obviously some news came out on this event 3 days after we got in. But isn't it funny how just using this technique, we got in advance of that announcement when it gapped down. This is why when my mentor saw how much I was struggling, they said, Steve, you're following and paying attention to too many useless things. And I said, like what? I said, like news. If you're an investor, sure, you need to look about news and know what the company's doing. But if you're trading from anywhere from 5 minutes to maybe 5 days to a month, there's no need to look at that. And it was very difficult for me to understand that concept. But once I let go of that, trading started to be a lot simpler and a lot more consistent. So by all means, if you feel you have to watch news, you can't cut the umbilical cord, go ahead. We're not here to tell you what you can't do. We're just saying that in order to be a consistent trader, it is not required at all to follow fundamental news. Because as you just see here, many times our setups are generated in advance of the news. Why? Because market behavior always tells you in advance what it wants to do. The only trouble is we're never taught to listen to what the market wants to do. We're always taught to listen to some guy on TV or somebody in a chat room or even some guy in a webinar. That's why I said at the very beginning of the presentation, if you've come here today thinking I'm going to tell you what I think the market's going to do or what I think the best stock is to trade or the best time frame, no, because you should never listen to anyone else. You should learn how to trade from them, but you should make your own trading decisions. That's our goal here at Specialist Trading. Okay, so let's recap. Remember, if you're a buyer, price must be above the 50-period simple moving average, and then it starts to decline. At that point, we click on the PET-D color bar tool on the platform, and we apply the confirmation method to the red bars that appear. We're only going to buy when price trades. Doesn't have to close, it just has to trade above the previous red bar. Now, if we're selling, well, price needs to be below the 50-period simple moving average, but it begins to rise. At this point, we click on the PET-D color bar tool. We apply the confirmation method to the green bars that appear, meaning that we will go short, we will sell if it trades 1 or 2 ticks below the green bar, and we'll sell when price trades below the previous green bar. That's it. That's how simple this technique is. But remember, as I said earlier, it's the simple things that are more consistent. The more you complicate your trading, the further away you are getting to that success you want. So, declutter your trading. I only have one screen in front of me. I only follow a couple of markets. Just keep it simple, and you'll get that much closer to the consistency I know you're all searching for. So ask yourself, we're already in the first quarter of 2024, if you can believe it. We're midway through February. Do you think this confirmation tool can help your trading for the remainder of the year? Well, I think most of you would have a resounding yes answer. So because of that, we have a really great attendee discount for all of you today. We're going to offer you our roadmap for any market. That's the PET-D. That's the Primo Early Trend Detector. This, once again, is a tool I've been using for nearly 5 decades now. I first learned about it on the floor. We've taken all the hard work out of it for you and made it a proprietary color bar tool. That's why we call it our roadmap for any market. Now, we're going to, included with this, also give you 2 continuation trading techniques. I just shared with you a different type of technique. This is a pullback technique, but we're also going to include 2 continuation techniques along with 2 more pullback trading techniques. You'll also get a trailing stop technique included in this. All right, these are all things included within the course. Remember, you can apply the PET-D to any market, any strategy, and any time frame. Now, everything you saw today was displayed coming from our platform. I developed the PTS Primo charting platform with Pro Trader strategies that not only has the PET-D, but it has a host of different techniques, indicators, and methods that I've accumulated in my nearly 50 years of trading. So here's what we're going to do. Till Friday only, we're going to offer you a full year of the platform absolutely free, 12 months free. So you'll get the PET-D along with all of these really high probability techniques. And this is just the tip of the iceberg. We have dozens of things, more things on the platform that I can't go into detail, but you'll get access to the PET-D. 1 click, you'll see the colors change. You'll have our enhanced buy sell line. That's a way of determining the overall trend. You'll get a strength of trend tool that I developed with proprietary strategies that has a unique capability of telling you when a trend is either strong or running out of steam. You'll get a signal scanner where you can scan for these setups. You'll have over 90 of the most prominent technical indicators that you can play around with and analyze with. Also, auto-generated exit levels. We didn't go over exiting techniques or stop placement techniques. This is just one of them. You'll have auto-generated exit levels. You'll also have auto-generated stop placement as well. This all comes with personalized tech support. And as I stated, what you're seeing here is just the tip of the iceberg. There are literally dozens more things offered on the platform that you'll have a full year access to. Now, if you're still not convinced how powerful this is, let's look at a chart, a current chart of the spiders. This is the ETF that represents the S&P 500 index, okay? All right, this is going back, let's see, about 3 months, going back to December. I took this chart snapshot yesterday after the close, going back to mid-December, all right? Obviously, we only want it to be a buyer, right? Why? Because we're above the 50-period moving average. Remember, we said if price is above the 50, we're not going to short. You see how people lose because you're out of sync with the overall trend? Most of the time you're thinking, hey, that guy in that chat room said this is overbought, so I've got to sell. The market's telling you it wants to go higher, all right? So let's see how this confirmation method could have helped us. Remember we said how many times you'll get different setups? Well, all you have to do on our platform, once again, is click on the PET-D, and you would have seen in January, price started to decline. So you apply the PET-D, and right here you had our first red bar. You would apply the confirmation method right there, and on to the next ones until ultimately you would have entered right here, I believe the 8th of January. Now you could have used this actually to trade the spiders, or you could have used this as a market directional tool and said, well, you know, we most likely are going to be going higher on the market. So if you were interested in maybe buying a stock, this could have give you the wherewithal to purchase that, because if there's a buy signal in the spiders, which represents the S&P 500, most likely all stocks are going to go up. Now, as we see later on, price started to decline again, and here's another red bar. So there you could have entered again and taken advantage of this nice run up. Then we see towards the end of January, just a few weeks ago, there was another red bar. You could have used this to enter again and look at the rally that happened. And this is what happened yesterday, the first red bar. So once again, applying this technique I just taught you today, this is where you would enter it if you were going to be using this technique. So it remains to be seen whether this is going to happen or not. I don't know, for all intents and purposes, in the last hour I've been speaking, maybe we're already above that. I don't know. But this does not mean that you're just going to simply buy right now. We have to wait for it to trade above. Now, let's say today we go lower and we continue to go lower. Now, remember, if price goes below and the high of the bar is below the 50, then the trade is negated. We will not enter. Why? Because we never enter below the 50. Remember, you have to be above the 50 to enter. So it's okay if the price bar, say we continue to go lower and we close below the 50, but if our entry confirmation is one tick above and it's above the 50, that's fine. It's still a valid entry point. So this is just something to keep in mind. We are in no way guaranteeing you that this is going to work out. This may be a faulty signal. Maybe it will. We're just showing you another example of this technique in action and how you could have applied it this past couple of months and potentially made some really nice gains here in the marketplace. So take your trading to the next level. Become a student of the PET-D course. Remember, we're not only just going to include this technique I shared with you today, but you're also going to get 2 continuation trading techniques. That's where you're going in sync with a higher trend. You're not waiting for price to go lower. And 2 more pullback trading techniques, along with a trailing stop technique, okay? This is our roadmap for any market special. So let's break it down. Normally, if you just bought the PET-D separately, it would cost you close to $5,000. But here's what we're going to do. We're going to discount that today 2 different ways. Also, if we included the platform, we're talking over $6,000, and we're not going to in any way charge you that today. We're going to drop the price, a full year of the platform, along with a PET-D trend indicator, down to $39.95. You're going to save over $2,100. But here's the best part. If that's still too expensive for you, ProTrader Strategies is kind enough to offer payment plans. So for a fraction of that $39.95, you can still be up and running as early as today, and you only have to put a small deposit down and establish a payment plan with them, okay? You'll still get a full year of the platform, and you'll still get full use of the PET-D, okay? So there's two different ways. You can have the one-time fee of $39.95 and get the use of the PET-D along with the full year of the platform, or contact ProTrader Strategies, establish a payment plan for just a fraction of that $39.95 and just pay monthly. Either way, you still get a full year of the platform. Here's how to take advantage of this great offer. Contact ProTrader Strategies. I developed the platform. They're in charge of all the pricing and all the discounts. I would really suggest giving them a call. There's absolutely no obligation. You don't have to purchase anything right now if you don't want to, but give them a call at area code 310-598-6677 right here at this number. They can establish a payment plan with you. They can give you a quote, and you can think about it, okay? This is not something that you have to make a decision. So in no way are they there to intimidate you or to have a fast sale. They're there to work with you. They're very flexible, and they can give you a quote if you'd like to establish some type of payment plan, okay? Now, if you want to purchase it right there and then, that's fine too. They can take your order over the phone at 310-598-6677. Now, for more information on the PET-D course, some more examples, you see this link at the very bottom is the link that will take you to the info and sign up page. It's not a live link, but if you go to the chat box on the Zoom page there, you'll see that they have posted a live link. So just click on the little chat icon there and you'll see a live link posted. Now we have a few more minutes left for this presentation. I promised I would answer any questions at the very end. So if you do have questions, please go to your chat box or the question and answer icon there and just click it on and write it in, and I'll answer them to the best of my ability. Someone's asking, what happens if I have a question? Is this a live class? No, this is not a live class. What this is you'll get a link to a video presentation where it has all the answers, shows you exactly how to apply these different techniques. But you'll also get, all of my students get my private email address. You can contact me whenever you'd like. I was answering emails today before the opening. I answer emails on the weekends. I answer emails after the close, so it makes no difference. Oftentimes, if it's not really busy or if I'm not in a class, I will answer your email within the next few minutes. So it's the next best thing to having me sit next to you. So there's no reason to worry that you won't have your questions answered. I will get back to you as soon as possible. All right. Can we apply this to other markets like the E-mini futures? Yes, you can. My market of choice, which I've often stated, is the intraday E-mini futures. That's the market I like to trade. And so, yes, I use this technique all the time. So there's absolutely no reason why you can't use this. This technique, along with all the other techniques we're going to be sharing with you in the course, can be applied to any market and any time frame. So it makes no difference if you're a swing trader. It makes no difference if you trade monthly bars of stocks, or it makes no difference if you trade crypto. The PET-D doesn't know what market it's looking at. It's a calculation that it comes up with based on price and based off momentum, okay? So it really makes no difference. That's how versatile the PET-D is. And like I said, I've been using this for going on 5 decades now, because I first was introduced to it on the floor of the stock exchange. But trust me, you didn't want to do what I had to do, because you needed a hand calculator and you had to calculate it almost on a tick-by-tick basis. And it was just too difficult and too cumbersome to apply. So we could only at that time use it for daily charts. But now, with the help of high-speed computers and programmers, now we've developed it into a color bar tool. We've taken all the hard work out of it for you. And the secret is not in the calculation. The secret is in knowing how to apply it. And I just shared with you one of the secrets of applying it in today's class. So this is a great tool. And once again, you can follow it looking at the spiders. But unfortunately, unless you have the PET-D, you won't get to know if it's a valid setup or not. So please, if you're at all interested, or if you want a quote about a payment plan, just please don't hesitate to contact ProTrader Strategies. They're not there to make a quick sale. They're more than happy to give you a quote and work with you. As I said, they're flexible, but please give them a call at area code 310-598-6677. Okay, if there are no other questions, I hope you learned something today, not only about how to apply this really powerful technique, but also a little bit about our philosophy of teaching and trading. Remember, our whole goal is to put the power in your hands. We will never tell anyone what they should do or what they should buy or sell. If you think of it, the entire industry is based on that, where you go to a website or you watch someone on TV or you wait for their earnings to tell you what to do. But it's our goal that you should be listening only to one thing, the market in front of you, to tell you what to do, not to some earnings announcement, not to some jobless claim, but for the chart in front of you, because that's the source of what you're trading, right? That's where you should get all your information. So once you learn how to listen to that, trading becomes a lot simpler and a lot more consistent. As we close and take one last look at our disclaimer, thank you so much for attending today. I wish you all the best of luck in trading, but most especially, I look forward to all of you becoming students of mine in the PET D course. Thank you so much. I'll see you next time. Bye-bye.